Okay, good afternoon, everybody, and welcome to our Admiral Markets Trading Spotlight webinar for today. My name's Paul Wallace, and today I'm here to talk about a rather apt subject about how to trade in a crisis. We appreciate here at Admiral Markets that both life and the markets are somewhat volatile at the moment, so we thought we would be able to sort of help yourselves get through this by being able to give you some ideas about how to trade in a crisis. But, you know, even though we're going to share some ideas and some thoughts and some insight, whilst we go through this rather historic time that we're seeing at the moment, these kind of lessons and ideas and insight would be useful to you for the rest of your trading career, because if there's one thing that traders have learned over the years is that crises occur again and again. So we'll be able to cover that and talk through that. If you are, if you're joining us here today and you've had experience, of trading through crises in the past, please, we'd really appreciate it if you put that up in the chat box. That gives us a little bit of insight into your own experience. If you're watching this on demand on the Admiral Markets YouTube channel, then please, if you find this useful, if you're liking this during these sort of challenging times, please give us a like. Or if you've got ideas or thoughts or your own particular opinions, please drop us a comment there. We always appreciate and we always look to respond. And maybe you've got ideas what you'd like to see us talk about more with regards to trading through volatile trading times. So we'll be happy to sort of address those. But thank you for joining us today, and stay with us. We're going to go through the slides here, and then because of the fact that the sort of situation is changing rapidly, it's rather fluid, it is unfolding in front of us. If there's time at the end, I'll switch across and we'll have a little look at the charts and see what they've been showing us over the last over the last session or two. So what I'm going to talk about is, well, what actually constitutes a crisis. When do people start getting worried or excited? When markets start having a little bit of a crisis moment. And we're going to talk about really how do traders navigate such volatile environments, and what should a new trader be aware of. I appreciate that we have a broad range of experience of people who join us, so from people who are experienced traders to others who are new and might just be sort of a little bit feeling a little bit sort of cast adrift at the moment with regards to what we're seeing happening, and we'll definitely be talking more about that. And what are the kind of learning points that I can pass on from trading through past crises, and I've been through a fair few over the years, and hopefully just give you a little bit of help and insight into that will help you with your own trading endeavors. And as always, if you want more help and insight, and who doesn't at this particular sort of challenging time, well then please come and join the Trading Spotlight community. There's a chance for you to get support after the webinars when you very often most need it. And you're very welcome to come and join us on tradersyard.com. You can see the link there, tradersyard.com/group/312, and my assistant will put the link up in the chat box there, and I'll be there for the rest of the day. If you've got particular questions or thoughts or comments about trading in the present rather challenging environment, and my colleagues Marcus and Jens, they're putting up constantly excellent content and material on there that can help you guide you through these this sort of trying time. For those of you who don't know me, my name is Paul Wallace. I've been trading for a good while now. So I started trading during the dot-com boom, which means I also traded through the dot-com bust, and have traded through a fair few crises in my time. Over those many years. So I've got some experience of things that worked well and other things that didn't work so very well, and I'm very happy to share them with you today. And we're here with Admiral Markets, and as you can see, that Admiral Markets have a real global reach, but also with local support. They're regulated across many regulatory environments. They provide competitive spreads and also provide you access to MT4 and MT5. If you've got any questions about Admiral Markets, please get in touch with the account representative, and they'll be very happy to help guide you. So how to trade in a crisis, ladies and gentlemen. I'm kind of curious, the people here who've joined us today, how many of you have actually traded through a crisis in the past? Do you have experience of that? Please put it in the chat box. And as we're sort of presenting this, here we are, March 2020. Well, I'm sure the people who are joining us, you're clearly quite aware that we're presently experiencing a bit of a crisis in financial markets at the moment, which has been going on for about a month, really, okay, since about mid-February, and we'll take a little bit of a look at that later on, so please stay with us as we talk through that. But as it says, trading during such times can be a rather daunting challenge, all right, and it becomes important to manage your own trading business during these such times. You have to think about, well, what does a trader need to be aware of? Okay, how do you navigate these kind of challenging times? And that's what we're really going to focus on here. Hopefully, giving you a little bit of help, a little bit of insight, so that especially new traders can basically navigate these what might be said to be rocky waters. Okay, being forewarned is forearmed, as they always used to say. So hopefully that's what we'll be able to share you with, just a little bit of insight. And as I said, if you stick with us till the end, I'll switch across to the charts and we'll have a little look at what's been going on. Even today, as I present this just beforehand, there's all manner of effects coming to fruition in markets, and we will definitely have a quick look at those. Well, it kind of helps us to start, well, what is, a stock market crash? All right, how do if you're going to trade through a crisis, you have to understand, well, what is actually a stock market crash there? And it's as the sort of the description says, it's a sudden and dramatic decline of stock prices across a significant cross section of the stock market, which results in a significant loss in people and organizations' paper and actual wealth. And that's kind of useful to sort of remember that it's a loss in terms of people's and organizations' paper wealth and actual wealth, and they can be very different, and that's what has a knock-on impact, which we'll touch upon in a few slides' time. It's normally a combination of events whereby external factors combine with crowd psychology in a feedback loop where selling by some market players drives more participants to sell. There's no real set definition, but the phrase commonly applies to steep double-digit percentage losses in a stock market index of a period of several days. So it's a case, it's a fascinating insight that, you have a stock market that is, by its very nature, going about its business, doing what it needs, but it's normally a combination of events, okay? So you'll have external factors combining with an element of crowd psychology in that feedback loop, which basically induces more and more people to sell. And we're going to talk about the psychology in a little bit. But as you can see, that a picture there that we've got used there, that's actually from, I think, the American stock market after the big real crash in 1929, okay? Things have moved on in the sense that, the technology that we have allows us to have, a kind of a faster, quicker, instantaneous feedback loop, which is both a blessing and a curse. It really is, it is a blessing and a curse. And it comes down to traders to be able to how they can handle that, how they can actually sort of work with that to ensure that they can use it as that feedback loop as a tool to help them, rather than something that's going to overwhelm and hinder them. And that's what we're going to talk about in a couple of slides. But, we've seen recently, okay, for those of you who've been watching the markets over the last couple of months, we're looking at, in terms of, it says there double-digit percentage losses. Well, we have seen losses from between 15 to 30 to 40%, okay, over the last month, sometimes even more actually, and that's on an individual base in terms of individual stocks, but also elements, things like commodities, bonds, FX pairs, crypto, etc. It's been across the broad spectrum of asset classes that you have available to us. So when does it happen? I'm just going to move this here just one moment, just so we can talk about it a little bit here. Is, when do they happen? Well, as a general rule, and it is very much a sort of kind of general rule of thumb, which can help you, in understanding future events, is that they occur when the following happens. You have a prolonged period of rising stock prices and excessive economic optimism, which tends to lead to complacency, okay? People get a bit lazy and complacent, and they think the good times are here, the good times will be with us forever. They have fueled by optimism bias. We'll also have in stock markets a market where price to earnings ratios exceed the long-term averages. And that's what we've seen recently, especially in some of the tech firms. And we also see extensive use of margin debt and leverage by market participants. Now, admittedly, for retail traders, market leverage has been reduced over the last, probably about the last year, 18 months. But in terms of the market as a whole, it's been very, very easy to effectively utilize debt and leverage by the major market participants. And as I said, it can also be sort of accelerated by such factors as wars that have been going on, any particular natural disasters, any corporate failures that we see, or perhaps changes in laws and regulations. So it's it can be a rather complex scenario, okay, in the sense that it's not normally one thing that triggers a stock market crash or a crisis. But invariably what it is it's a buildup of several factors, and invariably we have one that is almost like, as they say, the kind of the straw that broke the camel's back that allows us to sort of see the moves there. I'm just looking here, this is a chart here that we've got. So let me just get my drawing tool up. Just bring that up there. This is the Dow Jones. This is a weekly chart, and I'm sure if you've been effectively watching the American indexes, we've seen, for the last few years, okay, just constantly grinding its way north. But what we've seen over the last couple of weeks, and even that little chart here, there is out of date. We've kind of sort of moved down a little bit further since then. It's a case of when it happens, when it rolls over, things can happen very, very fast. And you might be able to see, ladies and gentlemen, I've just added a little sort of arrow there, okay? That's for February 2020. That's where I had to step out of the market because I was actually on national jury service here in the UK, and I had to sit in there, and invariably I came out of the markets, and actually you can see what has happened. There is sorry, I might add, there is no causation or correlation between that, but it's just a case of these things invariably they can happen when we least expect it, which is what we're going to touch upon in a couple of slides time. So Vincenzo's joined us. Thanks, Vincenzo. Great to have you here. Hope you're doing well during these particular sessions. And if any of you there have got particular experiences you'd like to share, we love it, okay? We love to hear your own personal ideas and thoughts and experiences on it, because, it's everybody can learn from everybody. It's an unbelievably, useful sort of opportunity for traders to come together and help each other and gain insight during, as I said, what are rather rocky times. So, it's all great to know what the, let's say, the kind of the academic understanding of what actually is a stock market crash or a crisis, but really it's about, well, what does that mean to private traders? What does it actually mean? How does that help? How does that help us? Well, this is where market psychology starts to come into its own, ladies and gentlemen. And what you find is that crashes may be expected. You may think that you have an opinion or a view that the market has been just kind of become complacent in terms of the way it reacts to news. But crashes may be expected, but they are usually unexpected in their arrival. And if we just look back to the sort of slide we put up there, and I showed a little diagram or a little arrow where the kind of it all started whilst I was away on jury service. But during that time, that is when the market actually grasped, okay, it grasped the understanding that the coronavirus that we have been experiencing here, was actually going to have not only an impact on the global market, but actually quite a huge, remember that the market is always a forecast discounting mechanism, okay? It's always discounting the future, and invariably what that's doing is that, of course, we see when people start to get that idea of, they switch from being confident to being filled with fear, well then invariably that sort of triggers a whole range of emotions and behaviors and actions by traders in markets. So what it means is that many traders are unprepared because they are unprepared for when the market starts to roll over and really crash away. Very often they are in denial until it is too late. And yeah, this is my personal experience from crises, is that things happen slowly. Okay, things happen very slowly. and then they happen very, very fast. Okay, things happen very, very fast. And you only have to look over what's happened over the last 2-3 weeks to see that invariably, we've kind of given back all of the gains for the last, maybe depending upon your particular thing, between 3 to 10 years that you'll actually see on that. So it's really been quite, as I said, things happen slowly and then they happen very, very fast indeed. Okay, so and this is kind of like an interesting little sort of tool we have here, a little bit of a sort of diagram about understanding market cycle psychology. And what we see is, as I said earlier, markets are full of optimism. Everybody has is fueled full of belief. They're getting excited, and in fact people get euphoric. Okay, and it might be said, and we talked about it here at Admiral Markets, but you looked at things like moves in the share prices of Tesla, for example. The price was just going absolutely parabolic north. Parts of elements of kind of euphoria. People are just uber optimistic. Okay, people have lost sense of of understanding of what real value is in the market. Everybody thinks that the party's going on and it's going to go on forever and ever. But when that changes, it changes very, very quick. And what I'd be saying is, we had, I would say, sort of kind of January, February, we had elements of anxiety. People started to try and understand. Anxiety was triggered by what we saw in China happening with their the sort of arrival of the coronavirus, and also how they were dealing with it. And then actually, as that kind of starts to spread globally, that makes people anxious. Okay, people start to, they start to feel fueled with fear. That basically drives their own particular behaviors. As I said, quite often, lots of people are in denial, all right? Lots of people denial in the markets and in life about that actually the good times, they're over, they've gone, all right? We're into a new paradigm, the change has happened, and it is about you being able to adapt quickly to what is actually a new set of circumstances. Then what we'll see is panic, and it might be said that we have seen a little bit of panic in markets over the last week or two, and we'll look at that in a moment, because I think it's it's interesting to see how that market psychology plays out in the market in front of you. Yep, there will be some people experiencing a little bit of anger, and there will also be some people experiencing depression, because, as I said a few slides back, they have seen their paper wealth disintegrate. Okay, because maybe they've been on a fantastic run, they're buying American indexes, and invariably within a couple of weeks, all of those gains have disappeared. Okay, and that could lead some people to feeling a little bit depressed, and that's not unusual. Okay, we are human beings. We all have, we all sort of have the human condition which we have to deal with. But if we look at, what actually happens, what can we do? So the interesting thing is, it's more about what can you take away from today? What can you do to prepare yourselves to be trading through the present crisis, but also for ones in the future, because there will be ones in the future. It's just the very nature of the cycle, very nature of the way humans operate, that we have this element of boom and bust. And every time a new politician comes on board, they say, well, that's the end of the boom and bust cycle, and invariably that's never the case, because we're humans. We don't change. So what can we do to help prepare ourselves? Well, rule number one, ladies and gentlemen, and this should be, to be fair, this should be rule number one, whatever sort of market environment you're trading in. So you need to live to fight another day, okay? Live to fight another day. Remember, as a trader, your number one job is to manage risk, always, regardless, okay? Your number one job is to manage risk, okay? Traders get paid to manage risk. So how do you do that? Well, if you are in losing positions, cut them, all right? Cut them straight away. Don't be sat there hoping that it will actually return and that you'll be able to sort of get out with some profit. Remember, okay, we just looked at market psychology. Lots of people will be in denial. You've got to take action. So if you're in a losing position, cut it straight away. And then if you are going to trade, if you're going to trade through that particular period, then what I can suggest is that you do these two things. That you reduce your position size, okay, and that you widen your stop losses. And if you only take the one thing from our session today, make sure that you are reducing your position size and widening your stop losses. Very often, some traders think that actually they should do the opposite. No, you shouldn't. Okay, that is just not very good thinking. What you want to do is live to fight another day, and the way you do that is you reduce your position size and widen your stop losses. And if that means you reduce your position size to the smallest size, possible. If that's what you have to do, then that's what that's what you have to do. And as you can see there on that little chart there, which is not my own, but is taking it from other trading resources, because I think it actually gives you a little bit of a useful idea. You're looking to find yourself, with the ideal position size that allows you to trade during a time when, remember, your stress levels, your anxiety will be high. You're a human being, okay? You're a human being. We talked a few weeks ago in sessions about managing your health, and about actually how you're managing your mental and emotional health is crucial at all times as a trader. It becomes even more important when you're trading through a crisis. You need to be able to perform optimally, and you will do that when you have an ideal position size. If you are trading far too big, well, I assure you, you'll be experiencing anxiety. You won't be sleeping. You'll be stressed. You will make poor decisions, and you might end up having a complete meltdown. That is not what we want. Okay, we want here to help you, guide you through what are these challenging times. The way you do that, you reduce your position size, widen your stop losses, and cut any big losing positions that you have at the moment. Secondly, okay, what kind of second rule could we take away? Well, the second rule is that you always want to have room for maneuver. That's what you're looking for. You want room for maneuver, okay? And as that little quote says, in the margin for error lies all our room for maneuver. And that's absolutely spot on. It's a great quote there. What that means is that, there are going to be some great moves in markets. There have been, okay? Even in the last couple of weeks, there have been some fantastic moves in markets. And if you've been able to sort of take part in that and enjoy some profit from that, well then, congratulations, well done. But don't get overconfident and euphoric, okay? It can turn as anything. It can turn like that on a sixpence at times. That means as a private trader, you have to be nimble, agile, and adaptable, okay? You have to adapt to the new circumstances, and that's what we said a couple of slides ago. You want to be nimble, all right? And by nimble and agile, that means that you have the opportunity as a private trader that you can actually take some great trades and position yourself into some great moves. Equally, if those moves are starting to turn, or momentum is fading, they're just not doing what you want to do, you can be nimble and agile enough to get out of your position and reposition yourself for the next possible move. So I said, as it says there, you can expect markets to turn on a sixpence and leave those markets when they do. What you're going to find is that, you have to keep an eye on the news for unexpected announcements. There will be many. Normally we're just looking at the economic calendar and just keeping a broad view on what kind of major news is coming out for the kind of relative to the instruments that we're trading. But during this period, and I'm sure you've seen it already, is that you'll get lots of unexpected news announcements, mainly because what you're finding is the politicians, the lawmakers, okay, the economists, central bankers, they are scrabbling to try and keep up with a very fast-moving situation. It's very fast-moving, it's very fluid, very dynamic. And so, there will be, as you'll see, there will be news announcements coming out as and when possible, okay? And you have to be ready for that. And that's why making sure that you're on top of the news, making sure you're just keeping an eye on what's coming out and what's going on is absolutely crucial. And if those markets start to change, get out, be nimble, be agile, be adaptable, so you can live to fight another day. Here's a third rule, okay, for you to live by during these periods is don't be a hero, okay? Don't be a hero. Many traders see such crises as moments for them to emerge as a trading hero. My advice is don't. Don't try to be a hero during these particular times. Yes, there are going to be some fantastic opportunities. Yes, you're going to look at moves that might have only, in the past time, might have been 100 ticks, now might be 1,000 ticks, and you'll be looking at, and you'll be feeling a little bit of greed. You'll be feeling a little bit of, wanting to sort of, make hay whilst the sun shines. And I'm not suggesting you don't do that. But what you have to do is just to make sure that you are in the right place to do that, okay? Don't try to be a trading hero at these periods, okay? Remember, rule number one is you need to live to fight another day. So how do you achieve that, not being a hero? Well, don't try and pick tops and bottoms in markets, okay? And you find that, you have to go onto social media, all right, to see that every man and his dog is trying to predict where the bottom is in the market. Don't, all right? Don't. If people tell you they know where the bottom is in the market, they don't, okay? They're speculating, all right? You have to look at the charts. You have to trade what you see in front of you, okay? So don't try and pick tops and bottoms in markets, because during crisis, they will be gone in a flash. Don't forecast or predict too far ahead as well. You might only be looking for the next day ahead, okay, the next session ahead, because as I said, news is going to come out when you least expect it. Markets will turn in 6 months, okay, and you need to be nimble and agile and adaptable and have the room for maneuver to basically exit moves like that. And another thing, is to check in with yourself for euphoria or denial. Remember, we talked a few weeks ago about managing managing traders' health. We talked about managing mental health and emotional health. And one of that things is about checking in with yourself, okay, about how you're feeling. If you've had a couple of good days where actually you've been able to sort of short markets and do well, you might be feeling a bit euphoric. You might be feeling, here I am, step aside, George Soros, there's a new superstar in town. And invariably, that's when you get ahead of yourself. And that's when you start being a bit complacent, a bit lazy, or a bit greedy. That just doesn't, it rarely ends well. On the flip side of that, you might be in denial, you might be in anxiety or depression, okay, because perhaps, your favorite instrument, okay, has turned and it's toppled and it's gone on the other way. And you might just not be in denial. You just might not sort of be recognizing or accepting that the market, life, the world has changed. And so do you, okay? So make sure you check in with yourself. Start of each session, during the session, after each session, next session, end of the day, check in with yourself, okay? Just check in with yourself to make sure, are you experiencing euphoria, or are you sort of wallowing in denial, okay? Because neither is helpful for you to be able to sort of avoid trying to be a trading hero. Rule number 4 is about being a savvy trader, okay? And all of these rules, they all overlap, because invariably, what it is that you need to have a united front as a trader when you're trading through crises. But there are things you can do to dampen risk and help you, okay? To be just a bit savvy, just to be a little bit streetwise, okay, during these particular sort of volatile times. So we do this by, minimizing overnight risk. Right? What do we mean by that? Well, as a general rule, okay, what we talk about is be in the day and out by the end of the day. And if you're trading, let's say American indexes, well, you remember you're going to want to be trading through the major American hours, and then basically not trying to carry it overnight risk, really, for anything that you're trading. Just minimize it where particularly possible, because as I said, there could be some news that comes out, and invariably that just changes the dynamic of the whole market. So you just be savvy, okay? Just be a bit street smart. Closing positions at the end of the week. For those of you who are join us on Traders Yard, I put a post up a few weeks ago about how that as this crisis was unfolding, I was just suggesting that be very, very wary at holding positions over the weekend, because from my experience in the past, those weekends is when the central bankers get together and the lawmakers, politicians, and actually sort of try to build a solution, okay, try to come up with something to halt the decline in markets, and that normally gets announced just before the market opens up on a Sunday evening here for us in Europe. And so invariably, if you're holding a position over the weekend, there's a possibility that you might be a little bit of trouble, okay, when the market gaps up or gaps down on the Sunday evening. Next one is not chasing price when a move is started, which is pretty just simple, okay? And that should really be like, one of your trading mantras anyway, okay? If, it's like, if the train has left the station, it doesn't matter how fast you chase it down the platform, you're not getting on that train. And a move in trading is a bit like that, okay? If the move is just taken off and shot, don't be trying to chase it, okay? It's very tempting when things are moving or falling really fast in a crisis to just basically try and get on, but it's not a smart move, okay? Because markets, even when they move, even when they're falling fast, they will have vicious snapbacks, okay? There'll be vicious rips against you, okay? And you can get washed out very, very quickly. And this is me, I admit, is I like to wait for price confirmation. Now, admittedly, sometimes you don't get price confirmation, okay? But I generally, for my own trading rules, okay, my own trading style, I like to wait for price confirmation. I don't just like to buy or sell a market just because it's moving. That's just, as I said, that's about chasing a price move, and that's not smart for me, okay? I don't think that's a very good way to operate. I'm still waiting to see a price confirmation. When I have it, then great, my trade is on, okay? But I'm not just simply buying or selling a market. I just don't think that is a very smart, wise way to operate. And, rule number 5 here is about, managing your mental capital, all right? When fear, panic, and ambiguity are rife, then it's easy to drain our mental capital, all right? Very easy. Think of mental capital like your bank account, okay? If you're constantly withdrawing from it, at some point, you'll go bankrupt, okay? That's just not the way to operate. Trading crisis, okay, as it says there, fear, panic, and ambiguity are rife, okay? They're all over, they're all over you, okay? And that will drain you, okay? That anxiety will drain you, okay? So you need to make sure that you're able to manage that mental health. And as I said, if you want more on that, go back and watch the Trading Spotlight webinar on how to manage your health, which we did a few weeks ago. So, how do we protect our mental health? Well, quite simple. Have a simple plan for the session, okay? Now, that plan might have to be flexible and may have to change, but start with a very simple plan, okay? And if you have a simple plan, it'll work with you, it'll guide you, rather than you just reacting, okay? Making knee-jerk reactions to news or events happening in the markets. Taking breaks, okay? Taking breaks, all right? Step away, okay? Sometimes it's very, very easy to think you can just sit in front of the screen all day, okay? Because it's mesmerizing, because the moves are happening and they're happening so fast. Take breaks. You need to step away. You need to get away, okay? Every hour you need 5-10 minutes away from it, okay? Just away from the charts. Avoid the hysteria on social media. Some fantastic, absolutely fantastic sort of news and insight and help on social media. But there is also an awful lot of hysteria, okay? There's an awful lot of people just stoking up hysteria, and that doesn't help you, okay? It doesn't help you. It goes back to having a little simple plan. Do your own analysis. Have your own little simple plan. Just keep on top of the news, okay? Don't get caught just basically just watching the social media hysteria that goes on. Talking with other respected traders, okay, that's what these sessions are for. That's what we have like Traders Yard for, your opportunity to go in there and ask questions, the opportunity to get a little bit of help and insight. And you'll find, my colleagues Marcus and Jens are fantastic at that in Traders Yard, okay? They're very, very happy to help and engage you, and they really, really welcome it. They're really fantastic at it. But also respecting your risk management principles, right? That will help you maintain manage your mental capital to the best way possible, okay? Respect your risk management principles constantly throughout every single session that you sit down to trade. So, a few final points before we go and have a look at some charts. Yeah, don't try and trade everything that moves, okay? Because when everything moves, it becomes very easy to just want to try and trade everything. Don't. If you've got a few pairs that you've worked with and stick with them, okay? Because you're more likely to understand what's happening. Be prepared to be washed out on occasion. That means you might get yourself in a trade, but as I said, it might flick back against you, might rip against you, okay? That might be you getting washed out, but don't be afraid to actually re-enter the trade if it sets up correctly for you. There's no perfection in these market environments, ladies and gentlemen, all right? Anybody who tells you that there is talking nonsense, okay? There's no perfection. You have to trade them as you see them. You trade what you see. Slow and steady wins the race when there is a crisis. As we said earlier, it becomes a bit easy to sort of think that you can chase moves, okay? There's an opportunity to be a hero. You don't, okay? Slow and steady, all right? Slow and steady wins the race. Here he says, most of the time you will not know what is going on. Don't worry. Neither does anyone else, all right? And that is quite true. Even the big central bankers, even the politicians, okay, even the real big traders, okay, a lot of them will not really know what's going on. They may have an idea, they may have, be able to gauge or sense what's happening in the market. Nobody really knows what's going on, okay, because things are changing rapidly. So you have to just, do your own analysis, build your own plan, okay? Just effectively trade what you see in front of you. And also, finally, if you're feeling uneasy, then remember that being flat is a position, all right? If you're feeling anxious, okay, sitting down to trade, you're just not really sure what's going on, you just feel like there's moves happening, but you should be trading, but actually feeling uncomfortable, you're feeling anxious, then do nothing, okay? That is my suggestion. Being flat is a position. And when your markets are really sort of just moving terribly against you, or if you just don't understand, or if they're just unbelievably volatile, sit on the sidelines, okay? Sit on the sidelines and wait for a better environment to appear for you. Might be that session, might be next day, might be next week, might be next month, you don't know. But if you're uneasy, being flat is a position. Remember, don't try and be a trading hero. So in conclusions, ladies and gentlemen, we are presently experiencing a market crisis, and I don't think it's finished. I think there's more to come. And these occur when there's a combination of social, economic, and psychological factors that all come together. It's more important than ever to manage risk in such environments. Don't hang around if markets change on you, okay? Just be prepared to cut your positions very quickly. There is no need to try and be a trading hero, okay? Don't be at all. Be savvy, be street smart in how you manage your financial and also your mental capital. Remember, your job as a trader is to live to fight another day. And let's have a little look at the market, shall we? We've got about 5 minutes or so. Let's have a little look back as we go through. So, as I said, if you want more, you want to help, an insight, well then please come and join us on the tradersyard.com/group/312. And don't forget to join us next time. My colleague Marcus is going to talk about how to build your own trading degree. Okay, he'll talk about the different types of materials available, what sort of topics traders should learn about, and some educational topics for beginners. And that'll be on Wednesday, March 25th, 2 p.m. London time. As always, you'll find plenty of analysis and education on the admiralmarkets.com website. And you can always contact us, hello@admiralmarkets.com for email, youtube.com/admiralmarkets, or facebook.com/admiralmarketsglobal. And said, please feel free, if you're liking this, if it helps you, give us a like, okay? If you've got questions or further things, please do. We always try and help and assist you wherever and in whatever way we can. So I hope you found that useful. I hope it's given you a little bit of insight. I hope it's given you a few little tools and tips that you can utilize in your own trading to help you to sort of trade through a crisis and live to fight another day. And if you'll bear with me just for a moment, what we'll do is I'll switch across the charts and we'll have just a quick look at what we can see that's been going on. And I'll just give you a little bit of insight to what we see as of today. So just bear with me a moment and we'll switch across. Okay, so I hope you can all still see me. Hope you can all hear me still, okay, with what's going on. I'm just going to move this so we can kind of look at our charts pretty easy. So let's have a look at, I'm going to start here with the US indexes, okay, because this is, when I'm speaking to you here, kind of Monday, 23rd, sort of about 2:30 in the afternoon, American markets just opening up. And what we've had today is just an indication of what we see in terms of markets just maneuvering and changing rapidly as news announcements come out of the ether in terms of what they're going to do. I'm just going to let me zoom in to just give you a little bit of context. I appreciate sometimes a bit of context helps you just understand what's actually happening, what's going on. So what we've seen is a bit of a move in American indexes today, and I'll just sort of talk our way through it now. Let me just show this. Here we got, this is my US Indices intraday profile. Okay, if you want to know more about that, remember we did a trading spotlight webinar on sort of trading American indices on an intraday basis. You'll find that in the archive section. Go and have a look. Now, here we go. I'm just going to use the S&P 500 as our indication there. You can see that has just been, horrendous, those moves down there, okay? Horrendous if you're long, fantastic if you were short. This is the daily chart, and here we go. Let's use this a bit to try and help us. This here was Friday's session, and I was speaking to my own clients about this, saying I wanted to see how those markets closed on Friday. Okay, that was very important, just based on what I was saying, that weekends are very interesting. So what actually we saw, and this was across all the American indices, the Russell and the NASDAQ, the Dow, the S&P, is that the actual market closed, okay, right down on its lows. It fell away. If we go down to the hourly chart, okay, it fell away, and here it is. It's closed on Friday, and which is not a good sign, okay? It was not a particularly good sign. And then what we had on last night, okay, so Sunday night here, but it'll be, early Monday morning in Pacific states, is that actually we had a gap down, in fact, a limit gap down, okay? I think it was about somewhere between like 3 and 5%, depending upon the index. So, I thought, well, with a really bad close on Friday and also a gap down on the sort of when the markets open on Sunday, well, then invariably what we'd see is that would be enough to terrify the politicians into doing something to basically help, support these American indexes. And what we saw a little bit earlier, an hour or two before, was, the Federal Reserve coming out saying that they were going to basically do what it takes. Okay, they were going to have a huge sort of support program. Okay, that would cover just basically trying to a whole host, a wide-ranging series of measures to basically support this market. I think it works out or something. I think I saw there just as we're coming on that they're talking about spending 125 billion every day, okay, to help support these markets. When you think about that, that is just quite astounding when you think about it. But the initial market reaction to it when that news came out was woof, off it went. Okay, you can see that it flew up there. But actually, as other elements of let's say the US political quagmire has reasserted itself, we can actually see that that price fell away there. And if I just look at this on the Dow, because it just gives us another indication of it, is that, you know, what I can see here is that, you know, if we just look at, you know, from price going in here from really, let's call it about 18,500. Okay, it went from 18,500 to just under 20,000, 19,900. So that did, you know, in half an hour, that did, you know, 1,400 pips or 1,400 points, you know, upwards, and before it fell back, and it's come back 1,400. So in literally just over, what's that? You know, that's less than 90 minutes, okay, an hour and a bit. We've gone up 1,400 points and we've gone back down about 1,400 points as well, okay, just like that, okay. And that's the kind of volatility that, you know, you'll see in these particular markets, and that's why I was talking earlier about making sure that, you know, you trade much smaller position size, you widen your stop loss, and if, as you can see, the market just, you know, completely reverses upon you very quickly and very swiftly, well, you don't hang around, okay? You don't wait to see if it's going to play out for you, okay? You're out the door and gone, okay? If the market stops doing what you think it's going to do, you change and you get out, okay? All right, being flat is the position to have with that. So for this afternoon, I expect there's going to be a rather interesting US session coming up, okay, as people start to analyze the, you know, what the markets did last week, what the Fed have said, what the US politics have said, the politicians have said, also as, you know, we get more information about the coronavirus coming out to not only the US, but globally. So it's going to be an interesting US session. So that's why make sure that, you know, you reduce your position size, you widen your stop losses, okay, and trade what you see in front of you, okay. Avoid the hysteria, trade what you see in front of you, just keep alert of any particular big major news coming out there and there. So I hope that that's helped you, ladies and gentlemen. We're running out of time there, okay? I hope that's given you a little bit of help, a little bit of insight, a bit of even just a bit of reinsurance. I appreciate if you're, you know, if you're working from home, okay, trying to trade through isolation, you know, then, you know, hopefully that's just given you a little bit of help, insight. And as always, you know, we here at Admiral Markets, we're here to try and help and support you. And there's a wide range of education materials there that we'd love you to make the most of, you know. So please feel free to join my colleague Marcus on Wednesday. Come and join us in Traders Yard, okay, and I'll give you some further insights. And as always, you know, manage risk, and I wish you the very best of success in your trading endeavors. And undoubtedly, I will speak to you soon, ladies and gentlemen. Trade well, everybody.